We had a slew of earnings announcements last night. I think the most positive reads, the most positive fundamentals were Roku. You mentioned that, but also the Trade Desk. These are two really interesting, fundamentally based names that are drivers off of advertising, whether it's Trade Desk and programmatic advertising, or with Roku, it's OTT advertising. It's kind of the ad-supported Netflix, or it's the streaming that isn't a Netflix. It's the ad-supported part of that business. I think both of those are great growth areas. Dropbox is going in a different direction, but that's because of bottom-line issues, not because of top-line issues. They are still at about 13 million paid customers. Their net ads were pretty robust, a little bit better than the street expected. No real change in the growth rate. They just surprised people by how much they're investing this year, particularly in their headquarters build. I look at that as kind of a 1x, one-time spend. So we continue to like the stock, even with the pullback today.
Mark, what do you take away from the tone of guidance? Can't help but notice Zillow, Roku, both had strong revenue guides, but the profit guide, I mean, does that signal anything to you? I mean, there certainly investors are responding to each differently based on the other details of things that they reported.
John, you're right to point those out. Zillow, now this is a case in and of itself. We have a lot of news out of Zillow. Spencer Rascoff, who has built that company, run that company for the last 10 years, is stepping down as CEO. Then you got the original co-founder, Rich Barton, coming in, who's actually he's got a great track record with Expedia. In the past, he was the first CEO of Expedia. He was the founder of Expedia, founder of Zillow. So this guy's got a huge track record. And when the news came out that he was coming back to be the CEO, that's really what took the stock up. The issue with Zillow is this. The core business, the advertising real estate business is slowing down, and it's slowing down materially. We're talking like 1 to 3% revenue growth in the March quarter. That's really scary. And then this company's making a big bet on this iBuyer market, homeflipping.com market, and nobody's proved the unit economics of that business yet. So look, if anybody can make this gamble work, it's Rich Barton. It is a big swing. It's a big risk. That's why it's sort of surprising the stock is up as much as it is. I'm a little skeptical of that move. I'm respectful of Rich. We're not buyers of the stock. I want to see him bring his magic back to the company before we get constructive on the shares.
In terms of that move by Zillow into home flipping, do you think under Rich Barton that that's going to continue, or do you think that they actually maybe do away with it and look at other opportunities for growth?
No, I think he's going to accelerate it. I think he's coming in to double down on that bet. I'm exaggerating a little bit, but no, this is, look, Zillow kind of started off as a Web 1.0 company, kind of just a lead generation model, selling advertising to real estate agents. They want to go down the funnel. They want to get actually into the home buying and selling process, and they want to do it through this iBuyer market, this homeflipping.com business. And so Rich and Zillow, and they've been doing this for about 6 to 9 months, in all fairness. But Rich is in here to double down efforts on this segment. And so it's a big, bold bet. This guy's made 2 of them in the past, and they've been successful. This will be his 3rd. We'll see if it works.
Hey, Mark, of the names that we've gotten in terms of would-be IPOs later in the year, which ones do you most anticipate folding into your universe? And how much attention do you think they'll draw away from the names we already know so well?
I'm going to punt on that first question, and then so it does open the question though in terms of the stocks that are still out there, the FANG names, the Bookings and the Expedias. When people talk about these names, the Uber, Lyfts, and Pinterest, Airbnb, if any of these companies were to go public, the question is, are people going to draw away dollars from the current growth assets? And maybe we haven't seen that the last few years as Twitter went public and Snap went public. So it's possible that it does. I just think you're looking at a market where there's a dearth of growth, and there's a few sectors, very few sectors, maybe 2, that offer you premium growth. The internet is one of those, and software may well be the other one. And in that environment, I think people take money away from non-growth sectors and move it into secular growth names, if they've got good management stories, et cetera, et cetera.